Time for my weekly review and trade plan here for Apple. This here's a chart for the past week up until September 9th. A few notes here still on the chart from my past trades. It's kind of interesting to me when I put up a trade plan, somebody doesn't agree with it, and they just block me on StockTwits. It's kind of funny when the plan actually plays out almost exactly how I picture it. But going forward, man, anyways, price action did break below my initial support level here, did not give me a green over green break. However, this inside candle right here, I was sitting and watching on it, waiting for a break above, which did not occur. When you have an inside candle, as I've said many times over, that is simply a sign of indecision, and whichever way price action breaks above or below will usually run that way at least a little bit. As you can see here on Monday, it did run pretty far, broke 162.5 roughly, and came all the way down to 160.5. That's a $2 drop. That's pretty big. I did not have a bearish plan in place for that trade, so I just simply waited until it hit a level I was looking at. My next level down was going to be around this pattern break, which also coincided with about where the 21 period exponential moving average was. Did not get all the way down there, but it put in my favorite hammer candle, a green hammer candle right here, off a fairly significant level, 160.50, nice round number. I did get into some 160 calls here at 221, wrote it up to 302. My plan was for 100% gain, as most of them have been running that far. Ended up taking a little less than 50% there. Not what I was planning, but profit is profit, and it's anything's better than a loss at this point. So going forward here, the reason I did take the profit off here at this level, that was the previous support I was watching. Most supports turn into resistances as they break, just like resistances will turn into supports as they break. Right now, Apple's kind of put in what looks like it could be a topping formation, diamond top over here, which I did have drawn over the past couple of weeks over here. Simply retesting this level here. Price action is a little bit below it now, and as such, it's also below the 8 period exponential moving average and 21 EMA. Now, I haven't put all of the days on here. Friday is coming up. I want to explain a little bit here. Price action was putting in what should have held as a fairly significant support here at 160.50. It pierced it here on this day, which told me if it broke on Friday, I was going to go ahead and get in, because Fridays are usually a sell-off day. People don't hold risk in the weekends. Whatever reason you might want to have to justify my opinion there, it actually worked out fairly well. Did not put together a video to put up a trade plan, however, was prepared for it, and as it turns out, took a couple of trades on Friday here. First trade was on the initial break of 160.5, got in some 160 puts at 43, and trailed those out down here to 75. Now the reason I took that out 75 is right at a 50% gain. Apple up until this point is still in a fairly bullish trend, so it is still going to continue up higher, most likely. This is just simply a technical trade. Once it failed to move above this red hammer candle here, I went ahead and took the next breakdown level off of the same the same puts here. 160 puts, got in at 39. Took the majority out at the same level again as it hit about 80 cents. No, that's a 100% gain right there on that trade for the majority of that position. I held 5 contracts into the close for a nice easy 500 bucks. So once you have a trade plan, you can recognize price action, you can put together a good opinion of what you think is going to happen on a chart, and you don't have to rely on somebody to give you simple buy and sell orders and not tell you why they're picking and choosing spots. Now going forward here, I already have a couple of levels here on the chart. I mentioned briefly I am going to be bearish here for at least the next couple of days. Reason being, price is below my 8 and 21 EMAs. No other reason other than that. That tells me that I'm going to take bearish entries. There can be some bullish entries that do work. This is my system, my plan, and it's what has worked for me in the past and will probably continue to work in the future. If you follow them, feel free to question me, send me messages, whatever. Ask me why I came up with whatever plan I did. It doesn't bother me whatsoever. First resistance entry here is going to be this 160.5. As I said earlier, when supports break, they usually become resistances. Here's a support, broke, got a retest as resistance, came back down. Held as support, it's broken now. I can expect a little bit of a jump up here into the open on Monday. Not a huge gap and go like somebody is claiming on StockTwits. You cannot call a gap and go every day. Sure, you're going to be right sometimes, just like a blind squirrel can find a nut, man. You're not going to be right near as much as you're going to be wrong. Second entry here is a little bit closer to price action. If it does not gap up, maybe it'll show a little bit of weakness here on the open. I have no problem looking at a short entry right here around 150 to 159.25. Price action has put in a fairly steep trend into the close on Friday, and we'll look for that momentum to continue. The next significant level of support that I'm actually going to wait for is 155. So anywhere between where price is now and there, I'm going to simply look for bearish entries. As you can see, there's no real technical levels for technical traders to be buying against to control their risk. So that will alone tell me where I can start looking for a significant amount of my profits. If it does break this 50-day simple moving average, it's not very likely. Then I'll go ahead and reevaluate for a little bit of a longer term play, and we'll see what happens at that point. This will be my trade plan for Monday and going into next week. Good luck.